Wyckoff Re-Accumulation Workshop, Detecting Rotation, Part 1. Thank you so much for being here. My name is Bruce Frazier. Welcome to Power Charting. This is the episode for July 28th. Gosh, we're already at the end of July. And we are going to cover a most important concept. This, in my opinion, could be the most powerful use of Wyckoff methodology there is. And I'm going to explain why. I'm going to show you some resources where you can read more. This is part 1. In part 2, we are going to have Johni Scan join us and talk about how we can detect the best industry groups and stocks that are emerging into leading rotational position. How many of us have had the experience of jumping into the market at the time when the very stocks that we want to campaign all of a sudden go dormant? They no longer are performing well with the indexes. They start lagging behind. How many of us have been through that? I, for one, have been through it many times. And what I am going to show you today is an approach that can help you to solve that dilemma. It will help you to be able to find not the things that are falling out of favor, but what is jumping in, leading, and going to light the way in the future. And with that, let's get started and begin with a chart that you have seen recently in the past. I've shown it in the last number of sessions. I have talked quite a bit about rotation in the last few episodes. This is a continuation somewhat of that, but it's a little bit more about the mechanics of Wyckoff. And I really want you to learn the Wyckoff method and become very masterful in this approach because it is so useful, so powerful, and so unique. It's unlike anything else. And so this is the S&P 500 superimposed over our seasonality chart for the first half of the year. Worked immensely well. You always focus on directionality. We said the first half of the year was going to be an uptrend, and that this uptrend based on seasonality would end at the beginning of the third quarter. Well, it appears that that could be happening now. But has there been, well, first of all, if we go into a trading range environment, is that because there's rotation occurring in the markets? And if that's the case, where is the rotation flowing away from and where is it flowing to? So we will address that today and next week with Johni Scan. So here, this yellow shaded box is the sideways trading range that we very well could see in the third quarter into the fourth quarter of the year. And only as we get into late November could we potentially have more upward bias in the market into the year and into election year. So with this in mind, let's ask the question, well, if we go into a sideways trading range, does that mean that everything is going to be in a trading range? There's been such good tone to the market, so many great stocks that have been performing well. Recently, we have seen the Dow Jones Industrial Average come to life. Something like 13 days in a row of up move in Dow Jones, first time since 1987 or some such thing. And that's incredible. And so that is because the Dow Jones is going into what we call the markup phase. Let's talk a little bit more about that because this trading range could very well be masking where the action is going to be. And the action could actually be occurring in the third quarter. Things to do, places to go in the markets in the third quarter, while many people are frustrated because they are in the old tired ideas that have fallen by the wayside for a period of time. You've seen the Wyckoff price cycle before. This is just a classic cycle of rising and falling prices. It's fractal. It works in the business cycle. It works in the intermediate cycle and in the short term. And this concept is very important because in 2022, we went through a down cycle in the market, a bear market, and went into an oversold condition where an accumulation structure was able to form. We've documented that. We've done a number of episodes in power charting. I've written blogs about it. You can go look at those. We'll actually look at a little bit of it today. Not much, but maybe more in the weeks ahead. But that accumulation area is preparation for a markup, a more important move into higher prices. And when we come out of the accumulation area and start to mark up, this is where the action is, the markup phase. This is where we get busy and are really enjoying the benefits of rising stock prices, rising trends, because these rising trends lift all boats. But something happens as we go into a markup phase, and that is that you get pauses along the way. And these pauses are these trading ranges that occur on the way leading up to the final highs in the distribution area, which sets up the conditions for a markdown. Exactly what we had in 2021 into 2022 and the bear market price decline that occurred in the early part into the mid part of 2022. And so we will be looking to take advantage of these uptrends, but also very powerful is the concept of the sideways trading range, which we call re-accumulation, because this is a period where prices are preparing themselves for the next leg up. And that next leg up is going to be a really dynamic upward move in prices. And we can see the characteristics for that. I'm going to show you a couple examples today. And so let's move on. Just to make a point about rotation is note here that at the end of 2022, right here, we had a final low in the mega cap growth stocks. And here what we're looking at is a relative strength study of mega cap growth to the S&P 500 equal weight. Now, why did I do that? Because mega cap growth has been the tail wagging the dog of the stock market in 2023, because these few names, we call them the Magnificent Seven, but there's really more of them than that, are very large cap, very high growth, and have had really spectacular rallies in the first half of 2023. And you can see here this relative strength line by its directionality going northward has demonstrated that the mega cap growth names have been dominant. They've been leading the way. They have been outperforming. Well, up here in this yellow shaded zone is where the S&P 500 equal weight has started to perform equally to the mega cap growth names as defined by the Vanguard Mega Cap Growth ETF, MGK. And they are now performing in parity with each other. So something is going on here. Is this reaccumulation? Potentially. But the one thing we can conclude is that the average S&P 500 stock, because these are equal weighted, every stock, all 500 stocks carry approximately equal weight in that ETF. And so we have basically erased the market capitalization influence of these mega cap growth names in the S&P 500 for comparison purposes. And we do relative strength of the two against each other, and we can see that now the average S&P 500 stock is performing in parity with mega cap growth. Well, will this go on? Can it continue? Well, let's just analyze here very briefly the upward trend that occurred right at the beginning of the year. We can see here A beautiful upward stride to the market is defined by this low, and this high. And these are parallel lines, this too. And a throw over of this area is a classic overbought condition that often comes at the end of an upward trend. This is exhaustion. It's a form of a climax. It stops the upward trend. We call this a buying climax. And then we get what we call an automatic reaction. And that sets a range bound condition for in this case, the MGK in relation to the S&P 500 equal weight. And so we see now that since the beginning of June, that the mega caps are no longer outperforming. This is interesting because even though there's all this love for these mega cap growth names, we have been saying watch out in the third quarter because of the seasonality chart that we were looking at that said sideways for the third quarter of the year, which we believe means sideways for the mega cap growth. And there's a number of reasons for that. Go back to our last few episodes where we talk more about that. Now, here is just looking at another attribute of the Wyckoff method is to do a point and figure analysis. This is the accumulation structure that we talked about in 2022, and we did it with a point and figure count so that we could estimate the potential for how far prices could rise out of that accumulation structure. And this is what point and figure is designed to do in the horizontal counting methodology. And look at this big count. This count, now this is the beginning of 22. You can see the bear market through here. And then we have an oversold condition or a selling climax, automatic rally, range bound condition, resistance and support, and we have a hinge that forms here. We can take this count of this very large accumulation that was forming while there was tremendous pessimism in the market. Investors had huge record levels of cash, were very underinvested. Institutions were very afraid of this market because of things like the Fed being very restrictive, not accommodative, and look what happens. This is the result of that accumulation structure. And we documented as we went right here on power charting and at Wyckoff market discussions, etc. So let's take a count here. This count, I segment counts. This first segment, which is in yellow, is 11 columns here. Maybe I should clean up my mess. And gosh, it's like I make a lot of messes. So here, you can see that this first segment right here counts across 11 columns. This is a 3-box reversal method, and I have a lot of great content on how to count point and figure horizontal method. But we basically have 11 columns here, and we multiply that by 3 by the scaling. In this case, scaling is 4 points. And this gives us a count up to 388 to 420. And substantial. And at the time, nobody believed that the triple Qs could get up to 388 to 420. People were very bearish. This is an old chart. And so I just updated it, but this is an old chart. And people were like, I put these things up and I get comments from people. People are always very kind, never negative, but they just disbelieve. It's just like, can't happen. It's not going to happen this year. And so hey, reasons are optional. Basically, I just look at the charts, act on the charts. I try to be very long-term oriented, very conservative in my approach, but I go by what the tape tells me to do, which is exactly the advice of our leader, Richard D. Wyckoff. And so this count goes up to this 388, 420. I flagged these counts. Well, look where we went. We went to 387.98, 0.02 points from hitting exactly our minimum count objective. That's all we have to do. But we could go higher, we could still go higher. But note that as of today, and today was kind of a weak day in the market, started strong, ended weak, a sign that supply is present in the markets, that there's trouble brewing, especially in these mega caps. And we went to 376.62. So we're right back down into this range right here. And so a reversal from that level, if it continues to show weakness, say down to this 360 level, we would say, okay, we have potentially a buying climax automatic reaction. And so we will watch for that and, of course, report back to you when the time comes. So keep this in mind. But more importantly, could this be the beginning of a reaccumulation for higher prices in the future? And we have a bigger objective in this accumulation structure, which goes 23 columns and takes us up to 532 to 564 basis triple Qs. And that would be a substantial new high. So this is the old bull market peak right here. So it kind of makes sense that this is where resistance would come in, stop the advance because there's a lot of supply at the old bull market highs. People saying, oh my gosh, finally I can get out of these stocks, get out almost even, and go to cash. So there's a lot of that going on. Now, I just put this chart up because it's a little fuzzy. It's old. Dear friend Roman Bogomazov, teaching partner, made this chart back in the 90s, and I absolutely love it. I use it all the time. I'm going to try to clean it up so it's not so fuzzy, but these are reaccumulations. And this is just illustrating that you have a preparation phase. Here's accumulation, prep phase, markup, prep phase, markup. And these are the opportunities to identify rotation, because in a bull market, often the reaccumulations coincide with rotation. And so we want to identify what's falling out of favor, what's emerging into favor. Joe Turner and I recently did a workshop on the business cycle. It's exactly what happens in the business cycle. We went through industry groups, when they tend to lead in the business cycle, when they tend to lag. And so early cycle beneficiaries or home builders, interest rate sensitives, uh, consumer discretionary stocks, washing machines, and so on. Late in the cycle tends to be material stocks and things like that. But those are just generalizations. There's many more that we could turn to. And then you see preparation for a decline. Okay. So now this is our reaccumulation structure. And this is a very special structure. Do pay attention to these blogs that I wrote. This one's from 2015, almost exactly July 24th of 2015. And so there's a number of them over time, and I'm going to write some more in the future. But note that we have a buying climax that tends to form after a markup, and this is after typically an accumulation forms. So we have an accumulation, a markup, buying climax, automatic reaction. This sets up the condition for a range bound condition. And what happens is that momentum traders, short-term traders will jump out at the first sign of trouble, which is that automatic reaction. They'll start to raise cash. This is what the big composite operator, institutional, the super smart money. A lot of institutions are not super smart money, but the CO types will step in and systematically build positions, either initiating positions or adding to positions for the next rotational movement upward in the market. And as we just saw with the triple Qs, we have higher point and figure counts. We want to be thinking about the trend having the potential to continue. And so here is preparation for that next phase up. And so Reaccumulation can happen in a number of different ways. This is just conceptual, and so that you can see the model. There are different models. One of them is that you get a spring here, which takes out the lows and then reverses sharply and goes up. Very common. See a lot of that. But volatility. Note how in this case, cleaning up my mess again. Okay, here, note how in this case you have a hinge forming, and that hinge is demonstration that volatility here is going from high to volatility being low. And that is a classic circumstance as reaccumulation matures to the point where it's ready to return to markup. If it's distribution, this is very important. I'm covering a lot of ground very quickly here, but there's a lot of historic material that you can turn back to look at on these concepts, and we'll talk more in the future about it. If it's distribution, volatility will go up. It'll get higher and higher as distribution forms. And so as reaccumulation forms, volatility goes away. And the primary reason for that is very simply that the stock that is being disgorged by trader types, short-term people, is being absorbed by the CO institutional types, and they are rebuilding or adding to their positions and taking supply out of the market. Stocks go up because supply shrinks. Very important, supply and demand. You don't need a big increase in demand if supply goes away. And so that is what happens in reaccumulations. Okay, now this is just for contrast. Here is an accumulation, not unlike what we saw in 2022 into 23, is that note that we had a low that came at the end of the year. In some stocks, some industry groups, that was a spring. Others made a slightly higher low. But this was all preparation for a more important markup, and that is what we see. Look at the Dow Jones Industrial Average. The Dow Jones went up, had a really nice move up to this area where resistance formed across here and then paused, and now it's starting to come out of this big structure. And so this is the blue chip stocks. This is the Dow Industrials. Now, not all the stocks in the Dow are industrial stocks, but they are financials. They cover a lot of different industry groups, and it's showing a broadening out. The Dow is catching up with the NASDAQ. The Dow, and also another value segment of the market, smaller companies, is the Russell 2000. And so these indexes are starting to find a bid and acting quite well. Now, here is an example of reaccumulations. This is just a swing trading study that was done. This is actually a working chart that we did, and I showed this. You see, here is a blog I did in 2021, late November 21, end of the month, triple Q is teetering. And I made the case that the triple Qs had run out of fuel. The uptrend was exhausted. Look at this, throw over, overbought, throw over here and here, and exhaustion of this upward stride that went back to 2020. But look at these. Now, these are just smaller reaccumulations, but these are sideways trading range where the market builds a cause. We can count it with point and figure after. So here, look, buying climax. Remember how I talked about that? Automatic reaction. Buying climax, automatic reaction. These concepts are very fractal. And notice that these two counts, count 1 and count 2, approximately match each other here. And so these two counts are showing approximately, they are confirming each other. Very powerful concept. So there is reaccumulation in action. These are opportunities for us to prepare our minds, to prepare our portfolios for the next leg up. And also note how point and figure is able to show us what the extent of that rally phase should look like. So here, look at how this count and this count confirmed each other into a throw over. This is an overbought condition, throws over the top of the channel, just like I showed you with MGK. And that is a throw over condition, often concludes the advance. And then this is what happened next. This is the bull market top for, in this case, the triple Q, S&P at the same time, and so on. And so this was the exhaustion of the advance. It came back into the upward striding trend channel structure, fell down out of it and into a new downtrend. And here was a point and figure count for the initial move down. We were able to make that count. There were bigger counts that we also took for lower prices, but this is that initial count, and it formed a redistribution at that level. And so a great case study, I do believe. And here is, just for your edification, a chart of the period there at the top of the bull market. Note the throw over, overbought. This chart I made in 2021. This was a chart, this was my working chart for establishing the Wyckoff conditions as we went through time. And so you can see there that it then fell out of that into the downtrend, and we went into the bear market of 2022. Here is another example, much bigger scale, but this is reaccumulation in action on point and figure. In this case, we're using log scale point and figure, 3% box size, rather large box size. Each one of those upward boxes is 3% higher than the prior, and those are substantial jumps. But look at how these reaccumulations formed on the way up. I've talked about this chart in the past. This is from August of 2021, but the point I was making at that time was, look at this count across this area here. This was saying that we've used up the fuel, and this is actually August, and then this is what happened next. We had spent time at that count. That's the distributional top, and that was the conclusion of the bull market. Okay, a couple more minutes, and we got to go. And here I just want to show you, this is the current chart of the materials sector, and we are going to get into stocks and groups next week with Johni Scan. But note here how this follows the reaccumulation structure that we talked about. In this case, you can see that there's a shakeout. It's a deep spring that occurs at the midpoint. And quite honestly, we can't be sure when we're in the first half of a structure. Look at this look at the throw over right here at the channel, and then a sharp break, biggest break in the uptrend, a sideways period. We automatically draw resistance at the buying climax peak, support at the automatic reaction low. Note how this contains most of the trading for 2 years. But what is powerful about reaccumulation that makes it so special to me is that you have this upward stride, and I always say that upward trends begat future upward trends. They are often, there's a pause along the way, a break as they go, where they rest, and that is exactly what happened here. This is a 2-year rest. It did not go back and reclaim all of the gains made from this buying climax peak over. It did not create distribution. It created a sideways trading range experience here. Excuse me for this. Okay, so now note, remember how we talked about how you'll see contraction of volatility Let's put a volatility here minus. The volatility is contracting. That is evidence to us Wyckofians that this theme is under absorption, and that when it's sufficiently absorbed, it's going to resolve itself in the direction of the primary trend, in this case defined by the prior uptrend. Look what's happening here. Now, materials are not out of the woods yet. There could be more work to be done. There could be other things that happen, because look at what we have. We have materials rally up into the resistance as formed by the buying climax. And it's exactly where it is at this time. And that's that yellow shaded circle around that. And so that could mean more work needs to be done, because there's a lot of resistance up here at this level. But now it's out of the hinge. The less time it spends here, if it can go and just keep going, this could be the leadership that's emerging going forward. So, and also a tip of the hat to my friend Andrew Cardwell. This is the range rule method of RSI on top. Okay, this is the industrial select sector. And in the industrial select sector, you can see very similar structure to the materials. And we have talked a lot about industrials in the past, about how they were an emerging theme, and they have been very, very good performers. A lot of great industrial names have done exceedingly well in the last year. And but you will note that the final low was made, a shakeout occurred in the middle of 2022, in September, October, the end of the third quarter. Note the increasing volatility here in the first half. And you see buying climax. First of all, very important upward trend that suggests to us to look for reaccumulation going forward. 2 years of reaccumulation in the industrials. And so we see the increasing volatility until we get to the shakeout, and then the very interesting change of character. This little rally here is quite dynamic. Then this rally happens, and it is also exceptionally dynamic. And this is another smaller reaccumulation, a fractal reaccumulation within the structure of a much bigger one. And so we see here, and I actually, let me get rid of this. I put these in light blue. And let me do this. Let me go up here. Okay, look at the hinge. We have a big hinge, but look, we have a little hinge in our little structure here, where we have it getting tighter and tighter, and then the resolution out of that hinge, as we're seeing on a bigger scale with the materials, the resolution out goes right up to the buying climax resistance right here, that bar right there, and it goes through it. Very good sign of strength, we would call that. And then it pauses there for literally a week, and then off it goes. And look at this dynamic rally that's occurred. I suspect we have narrowing ranges here in the last 2 weeks that we could get a pause in the industrials. I'm going to show you why in a minute. But the most important element here is this appears to be a new markup condition for a very important segment of the market that has teeny tiny market cap compared to the mega cap Magnificent Seven stocks. So as money starts to leak out of the Magnificent Seven, and I don't believe the Magnificent Seven are going to go down a lot. I think they may reaccumulate for higher prices, which could take months. But as we saw with the triple Qs, there are higher point figure objectives for those stocks. But in the meantime, where's the action? Where could be the action in the second half of 2023? This could well be one of those places. And so we see this jumping up and out of the structure. To me, this says markup condition. This is when it gets really interesting and fun. I believe we could have a pullback to where it broke out. Maybe it doesn't get all the way back, but it could pause here, creating an opportunity to have a test, and then start to mark up again. And that would be a very dynamic situation. Now, let's just look at the cause. And this cause that we have here, I'm just doing literally, let me see if I can get my little pointer back. I'm only doing this area right here. And I'm not even counting all this, which is monstrous. It's huge. But I'm looking at that, just the area there that's in that circle. And let me show you one other thing too. Here's an early clue about why the industrials have been such a favored theme. And they have been, building momentum, building cause, building leadership, stealthily, while nobody's paying attention to them because everybody's in love with those Magnificent Seven type stocks. And here's the stodgy industrials that are doing in rotation. They're doing the things that we really care about. Look at the relative strength. Note the upward trend. Where is relative strength against the S&P for the XLI at the shakeout low? And also the low that precedes it. In both of those cases where we had a very sharp reversal up, the relative strength is making higher lows. That shows that there's emerging leadership in the industrials. We don't want to miss these things because as reaccumulation comes to a conclusion, we will often see the relative strength go from a lagging posture to a leading posture. It's exactly what happened here with this sector. And it started to lead on a relative strength basis, even as prices were making new lows in the middle of 2022. And then we have this beautiful pause that occurs, and we're going to take a look at this point figure count. All we're looking at here, this is one box reversal right here, 1 point scaling. You can see the hinge. See this hinge? We see it both in the vertical chart and the point figure chart, and we take two counts. We're taking a count here to 16 of columns, another count to 34 columns, one box reversal. So it's 16 times one box reversal times 1 point scaling. And so 16, that means we have 16 points of count or potential objective here in this one structure. And we count from the lows and from the count line, which is 97. And that's this area here, gives us a count 111 to 113. Remember how I told you how these last couple of bars are showing narrowing spread? The narrowing spread suggests that there could be supply coming in, laying over the top of the market, which could produce a short-term stopping action and potential for a pullback or a pause. And so look, we are literally one box away from hitting the minimum objective of 111 on this initial swing count. So that would suggest to me very good likelihood that XLI is overbought here and could produce a pullback. Not a place I would initiate new trades. And this is how we think about and evaluate not just sectors or industry groups, but individual stocks on the same basis with these methods. Now, there is a larger count, and that is 34 columns, which goes all the way across the entire smaller accumulation structure, which we see is right here, this area. And that counts 129 to 131. So this tells us in this smaller structure that we still have fuel in the tank for higher prices and future markups. And so we continue to think that the leadership that the industrials are showing us now will continue. And that is how we identify emerging rotation and how reaccumulation can signal to us that the resting phase is where themes go into and come out of favor. And with that, I'm going to say so long for now. Thank you for your time. I went a little bit over, but I hope you enjoyed this workshop because this is really good stuff. More on this next week. And final note, StockCharts.com is having a great summer sale right now. It's such a good tool, so useful. All these charts are so powerful. And please consider renewing your subscription, locking in your rates at the prior level before rates go up, and also getting additional discounts. It's a great time to do it. And we love stock charts. And so, see you next week. And thank you for being here. And take care.